Hello viewers and welcome back to the Dukascopy TV studio. I'm Ben Jones and alongside me once again is Jean-Francois Owczarczak from MJT. Jean-Francois, thank you very much for coming in again.
Thank you for having me back, Ben.
It's a pleasure to have you. Now, coming up this week for the dollar, we have US retail sales, which many are expecting to take a dip. And we also have a speech from Bernanke entitled The Fed Yesterday, Today and Tomorrow. But what are we seeing across the board at the moment?
Okay, well, I'm back with our FinGraphs mosaic on our FinGraphs website. It's a private list that I've set up for the Dukascopy TV. We have 8 instruments here. They're presented on a weekly time horizon. We will then flick to the daily and the hourly. And what we have here is Euro dollar, cable, Australian dollar, gold, dollar Swiss, dollar yen, 3 months futures on the S&P 500 and 3 months futures on the 30-year Treasury bonds. Now, I'd like to start with equity markets and with the futures of the S&P 500, and coming from the base that we believe that the trends that were in place late last year are still in place and should remain so over the next quarter. We may see an intermediate top towards the spring, but at the moment we believe in a continuation of what we have seen. So let's flick onto the S&P 500 here, and we're going to look at an investor's view. An investor's view is a long to medium term chart which presents a weekly chart, a daily chart and an hourly chart over one image. So what we could very rapidly see here is that all 3 trends, weekly, daily and hourly, are still heading up, so are still bullish. And so at the moment we will maintain our guidance over the next few months that they are still in place. Now, it is quite an expensive environment. If you could see the targets, and the target zone here is exhausted and it says impulsive up done. We're slowly getting into the overbought zone on the weekly charts. Similarly, on the dailies, we're also in a similar situation here. And on the hourlies, we're still heading up, but it's also getting expensive. So entering a distribution zone, but there's a bit more to go. And for now, there's no guidance that over the next few weeks the trend is going to change. Now, focusing back on the mosaic, and I'll maybe go to a shorter term mosaic, a daily mosaic from a weekly mosaic. And what I wanted to look at next was the bond futures. Basically, they have been correcting down most of last year, and also on the assumption that the market is anticipating some economic growth, or some more sustained economic growth. And so all the tapering discussions last year, and for now these tapering discussions have kept interest rates moving up and bonds moving down. As you can see, we're still pointing down with a red price target. The move doesn't seem quite finished yet, although we're slowly coming into some exaggeration zones. And so we'll see pretty much the same timing as on equities. And so at the moment, we keep seeing that bonds should correct down, and that over the next few months, although we're slowly getting into a zone where there's beginning to be a lot of support. Now, this move has also been very well synchronized with gold, because with interest rates coming up, there's an opportunity cost to hold gold. And given that there's no alarming financial crisis at hand or no hyperinflation, that's the driver for the gold market at the moment. And incidentally, it's also the driver for Australian dollar, which is a commodity-driven currency. Now, focusing on the currencies, and we'll probably start with the euro. Most of last year has seen a correction up in the euro, or at least at the beginning of an uptrend. And this move up is slowly coming to exhaustion. We still believe that at the moment there's no clear view as to which one will be the long-term winner between euro dollar and US dollar. but do believe that the euro should enter or has entered a consolidation phase over the next few months. If we look here, in an uptrend over the weekly, still quite a lot of potential, but we're still at very early stages, so we wouldn't get too excited about it at the moment. And we've seen this leg up over most of last year, and it's slowly getting to a point where both our envelopes are touching each other, which is a sign of exaggeration and of exhaustion. They're doing so for the second time. Our envelopes are slowly flattening, hence the bear trend that has just been signified. The oscillator is well overbought, so hence, as the machine is telling us, now we are in a consolidation phase for the euro. And invertedly, for dollar Swiss, well, we're in a correction phase up. So although we're not expecting a huge move at the moment, we believe that this sideways consolidation up on US dollar, consolidation down on the euro should continue over the next few weeks. Now a bit more positive on cable, which hasn't really seen a consolidation yet. And on dollar yen, maybe we focus it on the investor's view here. The trends that were in place last year was that of a strengthening dollar against the yen. We still believe that the weeklies are signaling that there's probably a few more quarters to go. A bit of exaggeration here. We've pretty much reached the targets on the dailies. The oscillators are well in the red. There's some market stress. We do think we have probably entered a lateral intermediate consolidation phase, but over the long term, we still think that there's some potential up for dollar yen over the next few quarters. Now, short-term correction at the moment. There's probably another week or so to go.
Okay, you've been saying at the moment we're seeing some short-term corrections. Could you discuss the potential for these to develop into longer, more substantial trends? Okay,
well, let's go back to the mosaic on the daily. Well, at the moment, as you see, the only ones that have really have had enough strength to turn the trend were on euro dollar and dollar Swiss, where you're seeing indication of a consolidation or a correction. All the other trends we had been looking at since last year are still in impulsive mode up and have not really been dented by the recent price moves. So first of all, we would like to see probably a correction up being initiated on Australian dollar, gold, treasuries. Probably see a correction down on a daily basis on the 3 months S&P futures. And to really signify a very important reversal, we would need for these corrections to actually move below the corrective targets here, which in a trend usually act as a trading stop. So if you look here on euro dollar, well, it's heading up, it started to turn, hence the bear signal. We've entered a correction phase, and as long as we keep above 132, it's only labeled as a correction. So as long as we don't make it below 132, we would not signify a reversal of the long-term trend. And so we would apply that to most of, or all the instruments here on the mosaic. And so we're only at the initial stages. And as I said previously, we don't think the turning point is quite yet. And so maybe we're in a consolidation here on euro dollar, consolidation on dollar Swiss, but we expect the other trends to continue unscathed at the moment, at least over the next few months.
Okay, Jean-Francois, thank you very much for coming in again.
Thank you for having me.
And thank you, viewers, for watching. Make sure you stay tuned to Dukascopy TV for more updates and exclusive interviews. But for now, goodbye.